Hi, I had put up a post on my TikTok page asking my followers if they knew that their SACCOs will not be refunding their shares, or their shares are non-refundable. Whatever investment they have in their Sacco shares are non-refundable. And I got called stupid for that post. Somebody else called me unschooled. And I didn't get upset really. That made me realize that there's a big gap in information, in financial literacy. Yeah, some of us join these investment vehicles without having the nitty-gritties of what really we are getting into. I'm not saying it's bad. Circles are bad, no, but we need to understand. Some people don't quite seem to understand the differences between Sacco shares and Sacco dividends, or how Saccos operate, or the ideology behind Saccos. So in this video, I am going to take you through the differences between Sacco shares and Sacco savings, so that as you're making a decision to boost your shares or to boost your savings, you know exactly what the impact of your decisions, or exactly what you're getting into. If this is information that might interest you, then you might need to stick around. If you'd like to know the differences between Sacco shares and Sacco dividends, and how you can go around your non-refundable Sacco dividends. So I'm going to take you through the differences between the Sacco shares and the Sacco savings, and how you can benefit from each, how you can balance them out, and all that you need to know. But have you subscribed to this channel? Please press the subscribe button if you haven't subscribed. If you have already subscribed, thank you so much. Karibu sana, and let's get going. Sacco shares are ideally ownership stakes in the Sacco. When you buy the shares, when you are joining a Sacco and you buy shares, you are becoming a part owner of that Sacco. You own that Sacco. It becomes quote unquote your business because you own it. So by owning the Sacco, you gain voting rights. You get to have a say in the management of that Sacco. Of course, it will depend on what quantity of shares you hold. For example, in the stock exchange, yeah, we buy shares in the stock exchange. We buy Safaricom shares, we buy KCB shares, we buy EABL shares. When you are a shareholder of a specific company, you have a say, you have a voting right. You have a say in the management and the decision making of that company. Now, your number of votes will depend on the quantity of shares that you have. So we have some people who may be wanting to be part of that decision making. They need a louder voice, or they need their voices heard. So they want to buy more shares in the Sacco, knowing very well that these shares are non-refundable. So shares is a stake. You are buying a stake or an ownership. You are becoming an owner of that company. Of course, your ownership level is proportionate to the quantity of shares that you are holding in relation to the number of shares that forms that Sacco's capital. Savings, on the other hand, is your money, your monthly contribution, your stake, your savings. Yeah, not your stake per se, but your savings in the Sacco. All right, it's money you have kept in that Sacco to use it later. So these are two very distinct investments, and I'm going to take you through that. Now, shares, like I have said and repeated, are non-refundable because this is the company's capital. When you start when you start refunding shares, then you are diluting the capital of that company, or of that Sacco. So shares are non-refundable, not even upon exit, not even upon death. In the event of death, your shares, your ownership stake will be transferred to your next of kin or to your administrator. Savings, on the other hand, is refundable. when you are exiting the Sacco, at the point of exiting the Sacco, you can give a notice to your Sacco, and then depending on the policies of that Sacco, some take 60 days, some take 30 days, I don't know. But depending on the policies of this whichever Sacco you are in, your shares will be, not your shares, your savings will be refunded 100%. Of course, the refund amount will be less any borrowings that you may be having, or if you had guaranteed somebody. Remember, that is also a borrowing. I had told you a guarantee is as good as a borrower, yeah? A guarantee is as good as a borrower. Or if you had guaranteed somebody, whatever amount you had guaranteed will be deducted from your savings, and then the balance of that will be paid out to you. So it's critical for us to understand the differences between savings and between shares. When you have shares in the Sacco, just like in the other companies, shareholders are paid dividends. The return on shareholders' investments are paid dividends. So on your shares in the Sacco, your Sacco will pay you some dividends. That will be your return on investments. However, on their savings, the amount of savings you are holding in the Sacco will earn you interest. The shares, you'll get dividends from the shares, but on your savings, you'll have interest. Now, certain Saccos, different Saccos have a minimal amount of, they have a benchmark of shares, they have a benchmark of savings. Shares that you must have a minimum, at least this quantity of shares, and savings, you must be having this amount of savings. I mean, you must be remitting this amount of savings every month. Remember the purpose of Saccos. Saccos in full is savings and credit cooperative organizations. So Saccos are there to encourage a saving culture. They are there to encourage a saving culture. So you are mandated to make sure that you every month or every so often you are bound to make a minimal saving amount. You can save as much as possible, but every Sacco has a benchmark of the lowest amount you could save every month. When you go beyond, when you don't keep up, when you don't save the minimum amount as per the Sacco's regulations, then you might be disqualified from enjoying certain benefits. For instance, enjoying loans, or maybe your dividends or interest on whatever savings you already have could be utilized to boost up your savings. The idea is for the members to move forward together. We must save every month. That's the idea behind joining Saccos. Saccos are for savings and credit cooperative society. So it encourages a savings culture. Now, different Saccos have their minimal amount that you need to be saving every month. For instance, Safaricom Sacco. If you're a member of, for you to become a member of Safaricom Sacco, you must buy shares worth 40,000 shillings, and your minimal saving every month should be at least 3,000 shillings. If you're a member of Stima Sacco, you must buy shares of at least 25,000 shillings, and every month you must be saving at least 1,000 shillings. Stima Sacco, however, is open for corporate. So if you are a corporate and if you join Stima Sacco as a corporate team, you must buy shares of at least 50,000 shillings, and every month you must be saving at least 10,000 shillings. Kenya Banker Sacco, on the other hand, requires you to have a minimum of 25,000 shillings. And every month you need to be saving 3,000 shillings, which can be deducted from your salary at source and remitted, or you can be making these deposits yourself. Now, even as you make a decision to join a Sacco, you need to know what is the minimal amount of shares that is required of me? And as you make that decision, remember at the back of your mind that shares are non-refundable. Another difference between shares and savings is that you can use the savings to borrow, a security to borrow. You can borrow against your savings. All right? Different SACCOs have different loan policies. There's not standard. It's not one cut fit all. And these SACCOs also keep changing they keep improving their policies or their structures in order to accommodate their members, and to accommodate their members with their ever-changing needs. Yeah? For instance, Kenya bankers, for instance, have an elite product, loan product, where you are required to, for you to qualify for that loan product, you need to be saving at least 1 million every month. People have money. You need to be saving at least 1 million every month, and you can gain access to up to 30 million payable over 84 months. Kenya Stima Sacco, on the other hand, have also their products. Safaricom Sacco also have their products. I have seen some SACCOs that where you can borrow up to 10 times your savings. So these are some of the things that you need to be looking out for as you want to join a SACCO. Another difference between the shares and the savings is that shares are transferable. Shares are transferable. I'm not so sure about savings, but even that should be transferable if you do a letter. Yeah, shares are transferable in as much as you cannot. The SACCO will never refund you that shares. You are allowed to transfer these shares to somebody else who may be a member of the SACCO or may be wanting to join your SACCO. So if you're transferring these shares, you transfer them as you exit the SACCO. Now that we know that SACCO shares are non-refundable, assuming you have not joined a SACCO yet and you want to join a SACCO, how would you mitigate that element of non-refundability of your shares? I'll guide you. When you want to join a SACCO, if you haven't joined yet, when you want to join a SACCO, you can source or scout for somebody who wants to exit this SACCO. If I want to join Kenya Banker SACCO, where I am required to pay or to buy shares not less than 25,000 shillings, or if I want to join Safaricom SACCO, where I am required to buy shares worth 40,000 shillings, or Stima Sacco, Police Sacco, where the minimal share requirement is 20,000 shillings, I can scout for someone who wants to sell their shares, and then I agree with the person or I negotiate with the person to sell for me her shares or his shares at a discount. In the sense that if I'm required to join Police Sacco and they have, I don't know how much their share price is. I just know that cumulatively you need to be paying 20,000. Assuming their shares is worth 200 shillings and you are required to have at least 100 shares. That is what makes the 20,000 shares, the 20,000 price of shares. I can buy these 100,000 shares from somebody else. Remember, the share value with the SACCO is the same, 200 shillings per share. So 100 shares will be making 20,000 shillings. 100 shares times the share price of 200 shillings is 20,000 shillings. So if I want to join Stima Sacco, having already known that whatever amount I'll be paying for my shares will never be refunded, also knowing that there are people who want to exit the SACCO every other day and they want refund on their shares, and SACCOs do not refund shares, I can scout for somebody who wants to exit the Sacco, and then I negotiate to buy their shares from them at a discount. If I had gone to the Sacco directly, this police Sacco, I will be required to buy their 100 shares at 200 shillings to make 20,000 shillings. So I can look for somebody else, a member who wants to exit the Sacco, and buy his or her 100 shares at a discounted price of 150 shillings. Willing buyer, willing seller. If that exiting member agrees to sell me his or her shares at 150 shillings, I will buy shares worth 15 at a price of 15,000 shillings. However, at the Sacco records, their share price is 200 shillings. So in the Sacco, my 100 shares in the Sacco books will be recorded as 20,000 shillings, which is the exact amount I need to join the Sacco. But in actual sense, I will have spent only 150. I will have spent only 15,000 shillings. So at a later date, should I ever want to exit the Sacco, remember my shares will still be valued at 20,000 shillings. I can easily sell my shares to somebody else at this same discounted price of 15,000 shillings. So I will not have made a loss. Of course, I'll have had dividends over it. Yeah? When you're paid dividends, you'll be paid dividends on the number of shares, which is remained constant, 100 shares. Another difference you need to know between shares and savings is that you cannot borrow against your shares. No matter how much shares you have, you'll never borrow against your shares. And like I've already told you, dividends are paid on shares, and on savings you earn interest. However, more often than not, the rates of return on the Sacco shares is normally higher than the rate of return on the Sacco savings. For instance, if your Sacco is paying you 18% on the shares, that same Sacco could be paying you 13% interest on your savings. So the shares gets to earn you more on dividends as opposed to the interest you earn on your savings. Now that you have this information, first and foremost, please press the subscribe button, tafadhali. You will forget. Now that you have this information on the differences between Sacco shares and Sacco savings, you can now make an informed decision as to how much you can hold in shares in your Sacco, or whether to just hold the minimal required shares amount or required share level, and then you boost your savings. If you think this video was helpful, if I have helped you not to call the next person who will be telling you that Sacco shares are non-refundable stupid, please press the subscribe button, like the video, and share it out so that your other friends who joined Saccos without knowing that their shares will never be refunded can now get informed. Until next time, I'll see you on the next video. Thank you.